My friends, what is going on? Welcome back to the channel. So I want to start this video out pretty much the way that I always do with number one. A big thank you to everybody who has followed me on Twitter. I said, I don't know, I guess it was Friday. Friday I said, hey, you want to do a weekend outlook video? Let's do 1,000 likes, and it hit yesterday. So promises made, promises kept. Here is going to be my weekly outlook video. Friday, pretty much feel like we called it perfectly, exactly what we wanted to happen. I talked about two scenarios, one involving a big gap down that pretty much gets bought up all day, or scenario two, a gap up that gets sold off for most of the day, followed by an extreme rally. And that's what we got. We got scenario two. If you follow me on Twitter, and if you haven't done so, please do so. Colin_Gladman. If you follow me on Twitter, you'll see on the gap up, I pretty much played puts all morning and then closed them out. No, I did not time the very bottom on that, but who cares? Closed them out, flipped to calls, and overall had a really nice $100,000+ day. Just trading the exact plan that I lay out here for you guys. So having said that, nothing about these videos is financial advice because there's going to be times where I am dead wrong. I always feel like I'm going to believe that I'm going to be more right than I am going to be wrong, but there are some times where I'm just going to flat out miss the boat or miss a call. I never pretend to be perfect. I always tell my Discord I plan on being wrong 30 to 40% of the time. I just have to be more right than I am wrong to make a great living in the market, and that is my only goal. Also, if you haven't done so, please like and subscribe to the channel. Videos, like anything else, the more tractions you get, the more likely I am to do them. So having said that, we'll run through the indexes. We'll run through some individual charts that I'm looking at. We'll talk a little bit about what I'm thinking, macro time frame, and I hope it helps you at the end of the day. That's the only reason that I do these things. So SPY on Friday, we put in a bullish engulfing candle. Volume was slightly increased. So what I'm looking for now, I had one of my Discord members just flat out ask me like, hey, do you believe the lows for March are in? And I just said yes. And that is what I believe as of now. I think there is potential for some new testing on the lows, but I don't think that there is a potential for new daily closes lower as of right now. We're in a particular time of strength too. If you know anything about the options flow market, I highly recommend you follow Chim Carson on Twitter. He follows me as well, and he's a wealth of knowledge when it comes to Vana and Charm, and when there's moments of windows of weakness and when there's windows of strength. Right now we're in a window of strength. My target for the downside was 565. We got to 565.63, so within a point of margin of error. I'd say that's pretty good. I talked about how I wanted a sweep of that 200-day, followed up by a close above it, exactly what we got. So now what I'm looking for is I'm looking for a topside move. I think at a minimum this move moves us back towards at least 585, but I think we can go higher than that. But don't get it twisted. We are not out of the woods in any way, shape, or form. Very similar to a rally like Nvidia put in recently, where it rallied up hard before making new lows. So if we fail making new all-time highs on this rally, I think we're in for a longer, uglier rejection after that. But like I always tell my team, we're going to take it one day, one step, one level at a time. We're not going to try to overguess or underguess ourselves, if you will. We are just going to go, well, if you follow me for any amount of time, you know I always say, every second the market is open, we're constantly getting new information. We have to take that new information into account and change our mind on a moment's notice if you want to be successful in the market. You cannot just blindly do any one thing. And what I kept talking about is like, hey, we're getting close to that 8 to 10% pull down territory. It's really tough to just keep blindly buying into puts at this point in time. People have gotten real comfortable making a lot of money. If you made a lot of money, congratulations. Just piling into puts pretty much every single day at open. And if you bought any amount of time whatsoever, you were paid off handsomely on that. But once you get into that 8 to 10% drawdown territory, it's very difficult. Pros, anyway, I promise you, are not shorting at support. That's what retail does. So now where can we look for our top side? Well, I think the most obvious place we can look for our top side is a pushback towards the 50 and 100-day moving average. We have a lot of confluence in that area, plus it's a big support resistance flip. The first one is going to be that 585. Let me just throw a line up here for you, which is going to be our big gap up area that we had when Trump was elected in November. So this was a huge support resistance flip back over in here. You can see all the different times it acted both as support and resistance. So that's going to be the first level that we have to get above. We start looking good above 585. I have no doubt we're pushing up towards 595 at that point in time. We can easily get another 10 to 15 points out of this particular move. When we pull a fib, because I love trading off of Fibonacci retracements and extensions, that 618 which is where most moves retrace to, large majority of the time. You pull out a fib and you look at it, it will retrace to the 618, both up and down. So that 618 is all chilling right at the 50 and the 100-day moving average. I would be surprised if this move isn't an extended snapback rally, meaning if we only came back up to 585 and then got a harsh rejection and moved lower from there, I would be very surprised at that. I think just like this was very painful for bulls, we're about to go on a rally that's going to be overall very painful for bears. I think it's going to be a rally that, all of the bulls, my favorite GIF is, or GIF, sorry, is the raccoon that's like sliding open the door to the dumpster and is like, I'm back. That's what bulls are going to do on this rally, in my opinion. So once bears get shaky and bulls get overconfident, that's when I'll become more nervous than ever. But I think anywhere up here between 595, maybe even 600. You guys know, if you watch me, that what's the pain trade here, right? Like, the pain trade is really putting bears in a situation where they're really stressing if they add any more shorts on, and making bulls in a situation where they're like, oh, I really don't want to miss this move, but man, we're back up to some key resistance. That's the pain trade, where both sides are feeling pain. Remember that. So I think we can come all the way up, even potentially up towards 600 again, before then potentially making a big rollover at that point in time as we get around the summer. Summer is still the wild card to me. I do think we're in trouble towards the end of the year. A extended rally into summer that makes new all-time highs would be really diabolical, in my opinion. As of right now, team, the most likely scenario that I'm thinking here is a push up towards, on the low side, 590, on the high side, those low 600s, like let's say that maybe 605 or so, before potential more downside. That's what I think is the most likely scenario as of right now. So this was such a prolonged downtrend. We're so oversold. And when I say so oversold, I mean, we definitely can go lower. But like, if you look at the RSI, anytime we start getting down here towards that oversold territory, that's when you go on really nice prolonged bounces. Even if it's only a short-term bottom before you roll over, we're getting to that point where, like I said, it just doesn't make sense for us to be piling into puts every single day. The only thing that matters in trading is risk to reward, and the risk to reward is topside right now. So like I said, I wouldn't be surprised if we made a new low, but I would be surprised if we closed at a new low. So a push back up on SPY, back up here. Like I said, first big level to cover is going to be kind of that 585 level, which is, once again, the Trump pump, if you will, post-election. It's hard to ignore the distributive look on this. Volume doesn't lie. This sell-off had extended volume on it. So I don't know. I still think we're eventually going to make a new low. I just don't think it's right now. So, sorry, getting a little ahead of myself. Once again, we'll take it one step, one day at a time. But I think overall, rallying back towards, I really would be surprised if we don't get towards around the 595 up here around the 50-day and 100-day moving averages. This initial snapback rally should be really painful. Get a minimum of a 0.5 retrace, but really I think we'll get more than that. So what does that mean on Q? Well, on Q, On my Friday video, I talked a lot about that 486 video, right? Or 486 level, where we swept that out and then we got bought back above. I talked about the hedge fund manager that talked about where just put your buys exactly where everybody else puts their stops. So that would have gotten swept out from these previous highs over here, these previous lows over here. So 486 was a big level, and we started to push back above. What you want to see going into tomorrow is, regardless of gap down or gap up, that kind of crap never matters to me, because it's pre-market at the end of the day. What you want to see is, you want to see the information that big money gives you when the market is actually open. So we've been in that distributive cycle where every gap up we've seen, it gets faded, right? Gap up 2-3 points, immediately fades throughout the entire day, sell off all day. Now what I want to see is, I want to see the opposite. Whether we put in what's called a 3 white soldiers look, and that just means where you gap down slightly every single day, but then you push up, then you gap down slightly, and then you push up, gap down slightly, and then you push up. Those type of looks are just going to show you that overall buyers are in control. Or vice versa, you get some type of like breakaway gaps. You get some gap and goes where you're going to put in kind of like a morning star look here off these candles. So you have a sell candle, then you have a buy candle, then you have a gap candle that pushes up. Either one of those are going to be what I'm looking for. So like I said, I don't care if it gaps down or gaps up. I care about how we finish after that. I'm looking for confirmation of the move. So on the 200-day, QQQ showed it as support. We flipped resistance again on Friday at close. So the big thing you want to see is, we want to see some enthusiastic buying, if you will, back over the top there. If we're looking at it for our confluence on SPY, that would take us back up to that 515 area. And you can already see 515 is marked off on my chart. That is the massive flip level for QQQ. You have a pretty much clear double top. Once again, volume accelerating on this sell-off. That is showing you that big money is getting out. The sellers are overwhelming the buyers. Now we're starting to see seller exhaustion. That allows, the market is a constant tug-of-war team, where it's here's equilibrium, and you got buyers on this side, you got sellers on this side, and it's a constant tug of war back and forth. Sometimes the sellers are drastically winning, sometimes the buyers are drastically winning. As of right now, we've been in where obviously sellers are drastically winning, showing signs on volume and price action that seller exhaustion was coming to an end, and now the buyers are taking over. So now we want to see enthusiastic buyers step in here and continue to push us higher. So 503 is going to be the first level. I would say this is equivalent to kind of like that 585 on SPY. And then 515 is the big level. We start getting above 515 and looking good, I think we can look for new all-time highs at that point in time. The question is this going to be the relief rally, or is this the rally that actually puts in the new all-time highs? And honestly, I don't know, right? And I don't care either way, right? I'm going to consistently trade the price action that I'm given. I always use the analogy of like, out there in the market, there's the big old sharks, and you see on the little videos like the little fish that just swim underneath them, and they're just eating the crumbs that the big old sharks leave behind. Like, this is me, and this is you too, by the way. We just gotta don't try to be one of these little fish that goes and takes on the big fish, right? That's how you die. Nobody gets extra points for time in the bottom or calling bottom or anything along those lines. Just pick up the scraps when billions, if not trillions, are moved around every single day. Pick up your scraps. You'll be fine. You'll live a very nice life picking up the scraps of the big boys. Or you can, no, I'm right and they're wrong, and you can go broke. I don't care either way. It's your decision. It's your money. It's your life. So 503, our first big level. 515, if we can look good above that, then we can start talking about new all-time highs. But if we fail out, if we do kind of get a blow off top and then we get the big distribution down, that's going to be something that we have to keep an eye out for. Always be ready for every single move. IWM, guys, there's just not much to talk about, in my opinion, here. It looks terrible, has been looking terrible. I mean, really, ever since Powell came out and threw the cold water on it, it broke its trend right over here. It's just been untradeable. It's made what we call a classic H pattern. And this is what distributive rallies look like, where you have a harsh sell-off, then you have a weak relief bounce, and then it basically looks like a lowercase h. So in the Discord, we always go, oh, it's setting up an H, and that's what we mean. Basically, these always turn into some type of rising wedge / bear flag, and then they roll out over. So I have no interest. I don't really trade IWM. I keep an eye on it like I do everything else, but that's pretty much it. Now, let's jump into Tesla. This is going to be the stock that a lot of people follow me. It's my largest holding. It's what I trade most often. So let's talk about some levels here. Played puts. Especially once we broke that 300, we rejected 300 up here, made a nice chunk of money on puts on Tesla. And this goes back to just not being a cheerleader, right? Like, I own thousands and thousands and thousands of shares of Tesla, and I bought hundreds of thousands of dollars worth of puts on it because I am only loyal to making money in the market, not being a cheerleader of a stock. So on my voice chat, let's see here, it was Thursday. Yes, Thursday going into Friday. I marked out these gap fills for the team at 251 and 242.84. And I've said this a couple times before, but what I love so much about Tesla is it's just people either absolutely love it or they absolutely hate it. It's that classic struggle against constant perma bulls and perma bears. Like, I had some dude commenting on me on X, and he was just like, as long as that Nazi is running, I will never cover my short. I will only buy puts. Death to all Nazis. I was just like, oh, you're a sane, emotional cat. Like, that's the type of person. But those are the type of people that, not only one, you're trading against. Thank you for being that type of person. And number two, but you also have the same people that are out there on Twitter going, when Tesla's worth $50,000 a share and you own 20 shares and your life has changed forever, how beautiful will everything be? Like, I can't stand those type of people either. So like I said, but what those people do is they provide you constant liquidity to make a whole lot of money going in either direction. So like I said, I don't hate those type of people. I love them. They're my best friends. Big old thank you. So that 251.44, and having said that, it was on Friday. We were approaching this level at 250, and if you'll remember, I posted, like, I grabbed calls at 250, which it wasn't 250 on the dot, it was like 251 and some change. I posted I bought 100 shares of Tesla at, it was 251 and some change. But it was one of those perma bull accounts who's always just, spreading, sunshine and rainbows, out of a unicorn's ass. I logged onto Twitter. They popped up. They had Tesla's chart that was the Apple screenshot, the like off an iPhone, off the stupid little stock chart thing, and was like, how much longer can we do this before we all get margin called and it gets ugly? And I was just like, oh, I'm definitely buying calls off of that post alone. So it was at the confluence of, like, we were starting to get a bounce off of 250. Powell was about to come out. I believed in my theory of selling at open and rally second part of the day, and I'm going to trade my plan. So I jumped into calls, made a great chunk of chains on calls. Now what I would like to see, I don't love that Tesla didn't hang on to these previous lows right here, kind of this lower 260. I wanted it to close about 265 or more. It didn't, but that's okay. But just like this candle up here, which if you go check my Twitter, on this day I posted, hey, Tesla is showing signs of buyer exhaustion. We had a ton of volume, so the volume increases up here. The buyers are having to put in way more effort for the result that we're getting. This was clear signs of buyer exhaustion. And honestly, I'm not even going to sugarcoat it. I wish I sold way more shares here than I did, but I didn't. So life goes on. So now I'm back to a buying. I sold, when we hit 250, I sold 250 puts for next week. Those are nice and green as of right now. I've already closed out all my 260 calls for profit, and as of right now, I am still sitting on some 265 calls that are a little bit more than break even. I think they're like 2 or 3% up as of right now. So what I'm looking for on Tesla is a minimum move back up here towards this 280. Definitely, I think 270s are very possible. If we go in here to the hourly chart, one move that I am going to be on the lookout for, sorry, let me clean this up here just a little bit. So I think Tesla is potentially setting up a classic inverse head and shoulder pattern using the 200-day moving average as its neckline. So here would be our left shoulder, here would be our head of the move. So what I'm looking for is in the early part of the week is a move up towards the 200-day moving average, up around 280. Then I'm expecting some rejection, probably coming back towards around 270 to sort of form that right shoulder. And then we would get a breakout move up and above 300. That is overall what I'm looking for as of right now. That would be the most bullish setup. I haven't decided yet if I would take puts at that 280, but there's no doubt that, like, don't buy calls at 280. Like, please don't. Not financial advice. Do whatever, because I could be wrong. Could just blast right on through straight to 300. But once again, it's always about risk to reward. It's down here buying puts doesn't make sense. You're buying puts on bleeping support. Like, what are you doing? And you wonder why you're losing if you're doing that. And then this reverse is true. Every time Tesla came up here towards the 200-day last week, I bought puts every single time. And I went a little red here on this one when it kind of broke through. And I was like, okay, I want to see if this next hour closes above. And obviously it didn't. We sliced right back through. So I do think if you take some puts at 280, only if you start getting above like 283 to 285, maybe that's where you wave the white flag. But what I would like to see is a move here, set up a nice inverse head and shoulders, and then give us a real clean move. If we do blast through, then I think we could blast through all the way to 300, maybe even a little bit more. That would trap some bulls and then come back down, test that 200-day before rallying again. There's always going to be a pullback. Do not let FOMO be your guide. Let your chart be your guide. So I think that would be what I'd like to see most, is a clean inverse head and shoulder. And honestly, just because I've had a lot of luck with Tesla on inverse head and shoulders, made a lot of money. The most classic one was back here in the summer squeeze. So, okay, this one, yeah. This one right here. This inverse head and shoulder where it broke out. And there was also micro ones going on as well. But the one from 20, this one. It's even cleaner if I turn extended hours on, but I'm not going to do that here. So you had your left shoulder, right shoulder here. You broke out, came back, retested the neckline, and then it was off to the races. This was the first trade ever back in 2023 that I made a series of over $1 million on this squeeze right here. And then I also had my worst loss ever this earnings right here, because I really thought that we were going to overshoot 300 before coming back down, and it didn't happen, but that's okay. Still made a lot more than I lost, and that's the name of the game of trading. Take those losers. But so like I said, Tesla just likes these inverse head and shoulder patterns for bottoming purposes. So that's what I would like to see is sometime, and who knows, if this is a short-lived rally, it might even set up one that is, a whole lot bigger. We certainly have seen that. We'll stay nimble. I think if we really start getting some daily closes over 300, we're going to look good, and we'll probably rally up to close a lot of these gaps, these bear gap downs that are up here. But like I said, one day at a time. So that's what I would like to see on Tesla, is a beginning of the week rally up towards 280. The first place that you need to start being a little concerned is right here. So this bear gap down that we had, it didn't fill. So, in fact, I'll just throw my line up here right now. Give this one to you completely for free, because it's the one that I would do on my Discord. So this close was 279.26. And if people don't know how to actually calculate gaps, don't follow them. But you can see that up here, once you start getting above 272, you're in that bear gap down territory, and it will act as resistance, just like right here. So we closed, the very next day we open, we start pushing up, but before you could fill the gap, you ran up around the 200-day, and it acted as resistance. And then same thing here. You came back up, and you tried again. Let's see here. This one closed at 284.78, and the high here was 284.35. So there is still a gap right here that did not get filled. And then, of course, you slice down. And then this was a beautiful, this is what I'm talking about here. This is when you know they're fake rallies, right? Beautiful little rising wedge, bear flag right here, gap down the next day, slice down, and go. So there's lots of bear gap downs. But once you get over this area right here around that 272, yeah, maybe you push up towards that 280, but just be careful. I mean, honestly, the 265 calls that I'm in, I'll either be down to runners. I'll have already taken a lot of profits off the table. I mean, I'm not going to just hold a full position up in here. That's what dummies do, not people who make money in the market. Certainly, I wouldn't be adding on. Now, the only way that... No, never mind. I'm not going to go into that. I'm saving that for the team. Sorry about you, Twitter or YouTube, however you want to look at it. So, I'll be cautious up in there. I'll just leave it at that. Nvidia. So this is what I was talking about here, guys, too, on the on that rally, right? Like this is classic. This is what we're going to have to watch for. So high volume sell-off is what we've been seeing here. Then as I always call this float up, right? We have those float back days. And this is the type of rally, right? Like if you were bearish down here and like, oh, it's the end of Nvidia, if you're Michael Gate or whatever, Gayed or however he says it, I don't care. But he's like, no, Nvidia's awful. Like if you're trying to hang on to shorts here, stuff like this is painful, where it's like there's no volume here, there's nothing that justifies this move up, this is not enthusiastic buying, but my position is getting more and more and more red every single day that I hold it. And this is what I'm talking about. This is the pain type of trade. This is a perfect example of what I'm talking about with SPY and everything else, right? Where it's you're gonna get up here and you go, well, shit, I can't miss the rally anymore, but dadgum, it's like there's no volume, and it puts both bears and bulls in a tough situation of conviction, right? So you have this low volume rally, and then the high volume sell-off continues. I think Nvidia is at a spot where it can easily rally back towards 130 at this point in time. If you watched my video going into Nvidia earnings, the reality is they had great earnings, and it gapped up, and the market said, we don't care. At the end of the day, I do not care what your opinion or my opinion is on a stock's fundamentals or anything like that. If big money says, we don't care, we're selling this thing, like I said, go ahead and go, well, I don't care. I think Nvidia's, P&E is okay. I like it. I'm going to buy it. Okay, then buy it and bag hold it for all I care, or anybody else cares. Like big money will just say, thank you. Thank you for making us unload our bags. Thank you for making that easier for us. So it gapped up. I really thought we could gap up and potentially run all the way back towards that 150, and big money said, no, we're selling this thing. And literally, this is it's a strong momentum candle. It opened and literally dropped all day. Tiny little wick at the bottom, right? But other than that, big money said, go ahead, keep buying it all you want. We're going to keep selling it. Thank you for, like I said, thank you for giving us our profits. Nvidia is also working on a daily death cross. That's where that blue line, the 50-day moving averages, crosses over the 200-day. Last time this happened was back over here in this extended decline in the summer of 2022, all the way down to the bottom of that bear market, and when the actual death cross happened. But look at that. Look what happened first, right? Big rally first. But from the day that happened, Nvidia went on to a 56% decline. So let's say, because obviously, once again, it's the 50 and the 200 days, so they don't move super fast. 50-day means the last 50 days of price. 200-day means the last 200 days of price. So let's say it happens, I don't know, over here in April is when they actually finally cross. Apples to apples, a 56% decline is taking Nvidia back down to the 50s or 60s. Go ahead and laugh all you want. And go ahead and go, well, but it's not the same company, Colin. No, okay. Like, I'm not, with charts that look like this, I said when Nvidia was at 117, like, dude, this is a busted chart. And it is. And just like Tesla last year, so the market overall had a great year. And Tesla wound up being great with the squeeze at the end. But here is, where was January? Right here. So at December, right at the end of the year of 2023, Tesla went on to decline 46% that year. Apples to apples, like if we're looking at what QQQ did, where's wait, what did I just say? Sorry. Yeah, December of 2023. Yeah, okay. Sorry. So QQQ in that same time frame basically went up 27%, while Tesla, down to its bottom, went down by 46%. So don't act like, well, but if Nvidia goes down, there's no way the market goes up. No, it's just not true. The reality is even though Nvidia guided up, had great earnings, beat, all that kind of stuff, there is a growth scare on the horizon. Whether you like it or not, there is a growth scare. No, I do not believe it's inflation. I believe it's a growth scare. I do personally think that Trump is somewhat trying to steer us towards a recession to get the interest rates down. The amount of debt that we have that is going to be needing to be refinanced, it'll be a lot better for us if it's done at much lower levels. And like I said, he can blame Biden for all these problems. Biden got us into this mess. Biden's ridiculous spending over the last 4 years. Blah 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 blah. Once again, I'm not here to play politics. I always say numbers don't lie, people do, right? I mean, Trump spent a lot when he was in there first time as well. So, but we're at a point where this year, Trump can talk about all the problems that Biden left us with. Doge is having to cut out all the bad spending and waste, yada, 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 yada. And Trump is someone who, if you haven't been paying attention, he's someone who always has prided himself on having a really good stock market. And what did he say this last week? I haven't even looked at the market. I don't even care. So, I mean, he's basically telling you, like, yo, I don't care about this deal. Like, if we drop, we drop. Who cares? It'll be better in the long run. It'll be better for the future. I'm going to tear it down, and we're going to build back American again. It's going to be the greatest America anybody's ever seen, as he always does. So, I think Nvidia, it's just not something that I'm personally looking to own. Not unless the chart improves. If the chart improves, I get new information, I can change my mind. I'm not saying it's coming down to the 50s or 60s, but it might. Like, look what's coming back over here to where it was in 2023. You think it can't do that? You're crazy if you think it can't do that. Meta is one. It put in a real nice daily candle, kind of that dragonfly look down here, came back, retested support. So Meta is one that I do think could rally back up towards the 700s. I like this daily candle. I mean, certainly a whole lot of volume. That dip was snatched up, closed back above. So this trend line here that it broke out of, you could look at this as a retest and starting to push up. If we do make new all-time highs, Meta's going to be a runner. I mean, anywhere between 750 all the way up to 875 is certainly on the table there. Microsoft, this is a very concerning chart. I posted this one. Do I still have? Yeah. No. Sorry. But this is oversold, markup, distribution, accumulation. That is the cycle of the market. Where is the distribution? Ah, there it is. Come here. So this is there's lots of different distribution schematics, right? Because if anything followed just one schematic perfectly or anything along those lines, everybody be able to do it and we'd all be super wealthy and rich. But the market is always going to try to fake you out, right? But this one looks very clean to me on Microsoft, and when we slap up the volume over here, it's on support, and I always say treat support as support until proven otherwise. But this one looks very, and it's built. If you think about what the market has done versus what Microsoft has done over the past year, I mean, for basically from January 2024 to now, it's built out this massive kind of rounding top. And if you know anything about distribution or just sayings in the market, building out tops takes time. So this is a classic example. Think about what the market did last year and think about what Microsoft has done. So in the last year, Microsoft has literally gone nowhere. It's 1% higher right now. So this is a chart that is very, very, very concerning to me. Now, if you bought calls down here for a possible short-term bounce up towards 424, I don't hate you for that. I just think there's lots better opportunities out there. There's a lot better opportunities of things that are more oversold. Like I said, Tesla, in my opinion, is a great risk to reward opportunity. When you start looking at what happens when, Tesla's daily RSI is down here at 26. You look historically, anytime that RSI gets down here in these low 20s, you have vicious snapback rallies. I like to trade momentum and squeezes, and nothing squeezes like Tesla as far as I'm concerned. So Tesla just checks a lot of the boxes for me. Amazon, another one very similar to Meta, swept the 200-day, pushed back up. Would have liked to have seen it close, but this was that high. Remember, this is where Bezos was selling, right? And honestly, this is your best bet for what potentially Microsoft could look like. So you have this awful, ugly distributive look, and then you got to make new all-time highs, which is just, it's an argument of how they're going to do in the AI race. But Amazon, you start getting above 200, I think Amazon can have a real nice pushback up in here. And I also think you got to think of names that are potentially recession proof. Yeah, people are going to have to cut back on spending and things of that nature, but they're still going to be ordering tons of bullshit off of Amazon, right? It's going to happen. So Amazon is one that if there is a safety trade in a mega cap, I think Amazon could be one, because people are still going to have to buy some stuff, whether it's clothes, necessity, groceries, doesn't matter. Amazon checks a lot of the boxes for that as far as a safe mega cap, as safe as you can be if the market really gets ugly. AMD bottom callers have failed for years. Well, at least 1 year now. I thought there was potential for a bottom back over here around 122. I bought at 122, pretty much the first daily close that it closed below that. I sold, and thank God, because it's just keeps coming down. This is just one of those ones. I don't get everybody's obsession with this one. I said 93 would be the first level I would start looking at it again, and it did get as low as 95, but I don't know. It's showing some signs of bottoming. People were calling bottom right here, and I mean, it turned into the most clear and obvious bear flag you ever seen in your entire life before rolling back over. But it is one that I hadn't even looked at its RSI, but it's got to be getting super oversold. But see, it's still not. It never even got as oversold as Tesla did. So you're definitely starting to put in some bullish RSI divergence here on the daily. But as you can see, even if you were like, okay, well, it's starting to put in some bullish RSI here. Yeah, I mean, that first time it really showed some bullish RSI was still back up here at 115. So you're still bag holding. So it's just, don't get me wrong, I look for those things too. I love those type of looks as far as potentially taking a stab. And that's where I took a stab, right? And then when it didn't work out. So I said, not everything that looks really bullish is ever going to play out. Not everything that looks bearish is going to play out. You just have to be willing to admit that you're wrong. It's okay to be wrong. I was wrong on BBAI. I said I started a position in it right around the low fives, sold at like 480 or whatever, and now it's 334. Yeah, I took a position right here when it regained the 50-day moving average. Then it gapped up, put in a nasty bearish engulfing candle on increased volume. I was just like, I'm out. See you later. And then into earnings. Now it's got a bunch of bag holders going on. So just when you're wrong, you're wrong. Admit it. Move on. It's cool. Nobody cares. Unless you're trying to prove something to Twitter, which then you're real stupid. Because Twitter is dumb. Large majority. Obviously, you people who are awesome, I'm not talking about you. Don't get your feelings hurt. We're friends. Palantir, the wall of 80 is holding for now, right? Like whoever's putting up the wall over here, I mean, you basically got a triple bottom on the daily. If Palantir can get above its daily 9 and its daily 50 right here around that 87, I do think it can be one that challenges a lot of these gap downs. Palantir could easily put in an Nvidia rally like this from here. So it could easily retrace. And what was this retrace? So like I said, those retraces, they're painful. Probably a 786. Yeah, even had a slight overthrow and then 3 days of rejection right at that 786 at that 140 level. But this is what I'm talking about here, team. Like, look at this. Sorry, I know I'm the only one who gets excited about stuff like this. But look, came all the way back up. So from the deep seek, came all the way up, took care of the bear gap down imbalance from back over here before the continued sell-off. So we can absolutely see a lot of these bear gap downs get taken care of before an extended sell-off begins. Like this, Nvidia just kind of looks like it's ahead of the curve, right? Where was I? Palantir. Yeah, so that bear gap down is all the way back up here at 112. And this is where Twitter will get super bullish again above 100. See, I told you. And it'll come all the way back up here to probably like 113 or so. And if it does, and I think the market is weak, I'm going to make another bag short in this thing. Already made a bunch of money on it. We'll make it again. GME, not much to talk about, guys. It's trapped below its 200-day. It's trapped below that 25. I just don't love the look of it below 25. Start getting above 25 again, and it can absolutely build at a base. I like the fact that it's hanging on down in here, but it is not. I don't know. Ryan Cohen's just content sitting on his bag of money he raised from retail and watching his stock bleed, I guess. Oh, I know. He's lurking in the shadows. He's waiting to pounce. Yeah, the last CEO that pounced did a fantastic job. Bitcoin, kind of same thing. Clear kind of double top look. Down here around the 200, Bitcoin has been constantly sweeping out that 200 level. I do think I said that the 70s were possible on Bitcoin. I do think it could come all the way back down here and retest these previous highs. So Bitcoin could come all the way back down here. Imagine the sweat that Twitter would have at that point in time before it could catch a rally. So I do think that is still very much on the table. Obviously, you got some disappointment going on with the Bitcoin Reserve and the Bitcoin Summit, all that kind of stuff. I don't keep track of that. I really don't. But this right now kind of has a very much a reverse cup and handle type look. So you got a big old rounding top that pushed back up for the handle, and then a potential continuation down look. So I don't love that, especially with some risk on assets. You want crypto to improve. So we really want crypto to start rallying to get to make sure that snapback rally that we get is like super strong and aggressive. That'll shove all the bears out, and then you got to trap all the bulls again before you rug pull. But yeah, it's just not ideal looking. And because of that, you've got, charts like Coin. Coin really needs to hang on to kind of this 212 level for this to look even remotely valid. But if crypto rallies, Coin gets back above 235, you could really see a nice rally in it. MicroStrategy came down here, bounced off of its 200-day. But I mean, it's when you think about the day that like the market had on Friday, for it to be that ugly, I don't love it. Just kind of watch this daily downtrend right here. You're going to need some type of move out. Might even go all the way up towards 400, then come back, retest, get something like that going on. That was definitely a sell the news event. So Hood is one that I'm looking to build out a good long-term position on. The first one I've looked at building out a really, really, really sizable position on since Tesla. I just recently joined their brokerage platform and just diving into more of their ecosystem and what they're doing and their innovation. And if if you follow me from the mean stops back in 2021, I have said and will always say that what happened in January of 2021 is the most egregious manipulation, just flat out robbing you in your face. We're taking our toys and going home. I still believe that. However, every brokerage did it to some form, shape, or capacity. Get over yourself. My only objective in the market is to make money. And I think Hood is a company that you can do that with. Now, I'm going to be patient on it. I do not full port into large positions or anything along those lines. I'm going to buy at key levels. I still haven't started it yet. I started one. I bought some Hood back over in here. Kind of same thing as BBAI when we found this 50-day bounce. And as soon as it started to look a little bit weak, in my small account, I bought a bunch back here at 35. And then when I posted on Twitter, I was like, hey, I'm raising cash. I'm getting out of anything that I think is even remotely speculative right now. And so I sold back up here in the low 50s. So I am looking to get at it with my large account. But I just need to see some momentum return. I still think that 35 is a very strong possibility on Hood. I think it's going to be a long-term winner. But it's certainly, even coming all the way back to the 200 around 31, I still think is a possibility. Now, what I do like is on your volume profile, people are snatching this thing up around the 40s. And it just went through a nasty pullback, right? Like it just went through a 38% pullback. So when I talk about these different kinds of pullbacks, like I said, anybody saying, oh, Nvidia is like 50, 60, that's never going to happen again. Just wait. Just wait. But yeah, it's just, I don't know. I'm just not willing to pull the trigger just yet. And I certainly don't want it to be in a snapback rally phase before further downside. But I don't know. I like their ecosystem. So short term, you want to see that 43 hold. So you can basically see every time, the 50-day was support. Now it's becoming resistance. Now your 921 is starting to cross through that. You can't even recover the 5 SMA just yet. So I don't love that aspect of things. I need to see some actual momentum coming into this. And I just talked about how weak overall crypto is looking. So potentially that doesn't help Hood's case at all either. But if it comes back to 35, that's definitely where at least I'm going to start a position. And I'll probably average down all the way to the 200-day. If we start to lose the 200-day, we'll start to have a conversation. But the reality is if every time Hood touched its 200-day, right? If every time Hood touched his 200-day and you were buying back here in the $9 or anything like that, you would still be very happy with what you've done. So I like it. HIMS is another one. It's coming back, retesting this 34 level. Same thing. Nasty drawdown. These happen all the time. 55% drawdown. Don't act like that can't happen to other stocks. So come back down here, retesting. It's another one potentially. I still like Hood way more. When it comes to, I did this in my last video, but when it comes to your long-term investing, if you don't think a stock has a minimum of at least a 3 to 5x from where it currently sits, I don't personally think that you should buy it. That is my personal opinion for a long-term strategy. If you don't truly believe whatever is in its pipeline and everything like that isn't going to make that stock grow 3 to 5x, then I don't personally think you should buy it. That's why I don't buy Apples anymore. That's why I don't buy Amazons or anything like that. I bought them a long time ago, but I'm not going to still keep buying them now. And just make sure you have a level where you go, okay, I'm willing to cut it at this point in time, up or down. Let's see here. Unity put in a nice daily candle. So this one, been talking about for a long time. I sold my position at 28, but I'm looking to get back in. This is one that is no doubt in my mind. This was its spring. This is what I'm talking about, like I said, with Tesla, guys, right? Like just those inverse head and shoulders are some of the cleanest moves. Your breakout, your retest, your push, came back down, followed the uptrend. And anytime you do break the 200-day moving average, this is what you want. You want those vicious V-shaped recoveries. So anybody who stops out over the 200, they're left behind. Very similar to what happened with Hood. This is a classic example, right? Sells off, sells off, sells off. This was the whole carry trade or whatever. As soon as it opened below its 200 day, it was immediately snatched up. So that's what you got to keep your eye on. You want buyers who are like, yep, nope, I want this thing. It's a great spot, 200-day moving average. So now the big level for Unity to get back above is 25. If it does that, then you start getting above 27, 28 again, and it's absolutely going to run. I still think it's a great deep value play when you back out here on a weekly basis, right? This just long-term downtrend. I mean, you can see the upside potential here. If you can't, you need to get out of the market. Very similar to, once again, right? Hood has a similar look. The easiest one is to look at coin. And like I said, I'm not this cycle is going to repeat or anything like that. But look, long kind of falling weekly wedge. Now it's moving up into that markup. Moved right up into the markup phase. So Unity, that's still pretty early in here. Could be a big long-term winner. SoFi, this one is also one that I sold back up here at like 16, 17. Looking to get back into it. This previous high in July of 2023, it traded underneath. So now that it's coming back over, we just kind of want to overall see a little bit of kind of a massive cup and handle look. I certainly want to see that hold. Once again, coming back down towards its 200-day moving average. I like SoFi. You start getting in here anywhere between $11 to $10, I think is a good spot to potentially add. And if it looks bad below the 200-day, then that's your cut point. But SoFi, they're already starting to talk about more and more rate cuts. That's going to bring relief to the banks. You put in a high volume hammer candle here, I guarantee you've got some nice let's go down here. It's like the hourly. Yeah, so see, you made a lower low on price while you made a higher high on the RSI. So I like the bullish divergence that's going on in here as well on the lower time frames. Kind of gives you that falling wedge look, right? That's clean. Looks like it's about to make a run to 13, 14. So I might grab a bunch of shares here. Just play that ride too, especially if banks are, like I said, catching a massive relief bounce. They start bringing cuts on the table soon. Last one I want to talk about is actually let me jump over here to GRR. So I sold back up over here at like 32, 33 this day that it was starting to put in that shooting star candle. It did come back and make some lows, but then it made highs after that. As of right now, what you want to see is you want to see the support resistance flip hold right around 25. 25 absolutely is a great spot to take a shot on this thing. And if the rally comes, it could absolutely just curl right up on out of here, pushing up there towards that 50s, even 70 price targets. You have a short-term uptrend right here. So a lot of confluence. Not only is it your daily uptrend, but it's your retest of previous highs. And GRR, I like it. I like it for some upside here. And I would say if it starts getting below 25, it's not going to look near as good at that point in time. Probably coming back to the very low 20s before you could take a stab. If Monday is bad and it does drop down on here and it comes back up, just watch out for a head and shoulders forming. Even though the volume profile really doesn't give me head and shoulders vibes right now. But always be ready. Last one, ASTS. I love the look of this chart. Very similar vibe as a Unity. Just from a long-term downtrend. Volume, absolutely enthusiastically buying this thing up. You can see this 2536. I have it marked off on my chart because that was the IPO. That wasn't its IPO, but that was its previous all-time high. You finally broke through that, came back, a long-term bull flag downtrend, But this is what you want to see. Like, you just want to see this normal corrective pattern. You know, some people selling, some people buying up here. The equilibrium, if you will, between bulls and bears is very level when this is going on, and it's all very, very, very low volume. And then once you start getting that breakout again, the volume starts to come back in here to push this thing out. And now even short term, you have a nice little daily push out retest. Look at that. At 25.36 is the level of support that it found. Now you're starting to go. I still think the next 2 to 4 weeks this thing sees 40 to 50 bucks. If the market snapback rallies hard, this thing's 40, 50 bucks all day. Outside chance at 70. Yeah. So that's a whole lot of charts and information we just covered. At the end of the day, guys, make the decision that is best for yourself, your family, and your portfolio. And I want to be clear, cash is a great position. If you're feeling lost or confused, the market is very volatile right now. And that's what I think is going to help this push up. So VIX is obviously elevated right now. So I think personally that we're going to get a VIX flush that flushes us back towards that 16 level. And then that's when we need to be ready for more downside and that VIX getting elevated again. But especially if you're in puts, if you're diamond handing puts, if you don't have a ton of time on them, if you're diamond handing puts and VIX is flushing out, that is naturally just going to shove these markets higher and higher and higher. So just be careful. Keep an eye on VIX. The first key level to lose is 20, and then if it loses 16, then the markets can really move topside. But if it loses 20, it's probably coming all the way down to 16. So just please be careful. Don't let perma-bear crap. If you want to make money in this market, you have to be willing to play both sides, right? I made like $42,000 worth of puts on Friday morning, and then made like 60 grand in calls on the way back up. You have to be willing to be nimble. You have to be willing to change your mind in a second. There's no doubt in my mind we're going to get a volatility crush, and that is going to that can hurt calls too if the market doesn't really squeeze, but it's definitely going to hold puts. It'll just slow bleed you out. Like I said, imagine on Nvidia right here, if you were just trying to diamond hand some puts on this crappy price action and volume, they're still bleeding out. It's like, even if you were like, well, I was right, we made a new low. Well, nobody cares if you loses all your money. Nobody cares. All right? You can be right in your thesis and lose all your money because you didn't buy enough time or didn't have a proper stop in place. And that's frustrating, right? I was very right on Tesla making a lot of new highs last year. I was wrong on the timing, and it originally cost me a lot of money. Anybody who remembers, and the whole world made fun of me being long here at Robotaxi, and then it gapped down, and I lost a lot of money on calls right here, hundreds of thousands of dollars. And luckily I made millions in calls on the way up when I was right. But you have to, I had to take the loss here, just admit that I was wrong, and reset, and then make millions. And everybody that was laughing at me got their buttholes blown out. Shout out. You know who you are. Anyway, I hope this video was helpful to you. Please like and subscribe. Much love. I wish you all the best heading into this next weekend. Something crazy happens, I might throw it out there and we'll do a little update in the week, but this is a ton of information. Go watch this video multiple times if you need to which you will, to get it all down. All right, guys, much love. I'll catch you later. Have a wonderful weekend.